Hello everybody, I thought we'd make a start on the usual end of week live stream, catch up with the markets. We'll get into the details of the markets in a second. Just if you've never attended these before, just to explain how it works, we'll have a look at the major stuff that's due out next week. Major announcements, there's quite a lot going on again next week. And then we'll also jump into the markets, have a look at what's going on with the markets. Then when we've looked at the major markets, I'll take a look, if you put in the questions, any stuff you want looking at, and we'll take a look at those. We've just had the non-farm payrolls about an hour ago. This is the move on the S&P. So the market was trading around 4,070, slipped down in pretty short order down to 4,005. So the expectation was for 200,000 jobs to be added, and the number came in at 263,000, so quite a lot more than expected. Wage inflation is still an issue, so again it has, I think, ramped up concerns about more aggressive rate rises. I think the chances of a 0.75% rise next time have increased from 9% to 15% or something like that. Anyway, so a much better payrolls than expected. So a big sell-off in stocks, US dollar had a bit of a run higher. And as we often see with the payrolls, it's that initial reaction is giving back some of those gains. Anyway, we'll take a look at these things in a bit more detail in a sec. Let's just get the risk warning done. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. Right, let's take a look to next week. There's a lot going on next week. I mean, there seems to be a lot at the moment. Anyway, we had speech by the head of the Fed, Powell, on Wednesday night, and that caused some volatility in markets. A lot to watch next week. So Monday, US PMI data, so factory gate inflation, as it's known. Tuesday, Australian central bank rate decision, and then look at Wednesday. Australian GDP, so how well or not is the Aussie economy doing, European GDP, and Japanese GDP. So it's GDP central on Wednesday of next week. And if that wasn't enough, then to round things off for the week, we've got China's CPI, China's inflation data on Friday of next week. So a whole lot to watch. We are seeing after these payrolls today, a pretty volatile end to the week. We'll see though, the payrolls, as I often say, it can be an odd one. Personally, I never trade the payrolls number when it comes out. It can all be a bit headless chicken, where you get, like we have had in the dollar and in the S&P, you get a knee-jerk reaction and the market says, oh my God, this is terrible. Sells off, as we can see here, and then starts clawing it all back. So I'm definitely a fan of letting things settle down a bit when it comes to major announcements like this from the payrolls. So, but we'll get into the markets in a second, looking at it in a bit more detail. As usual, a regular plug from the sponsor, me. The trading course I run, medium-term trading, weeks and months. There's 11 video lessons on that. Shorter-term trading, which is trading over hours and days. That's the new course I uploaded in the last few weeks. Seven video lessons on that. And as all part of this, there are 4 live webinars run every month, run by me, that you attend as part of the course. I did one of the live webinars last night for those of you on the course, and we looked at the performance of the short-term course so far. Because I do believe in being open about this, and I've been quite open in the past. I think trading education is an absolute minefield full of con men. So I'll show you the account. This is the account that I traded when I was putting the trading course together. So I traded an account with £4,000 and I'm still trading it with £4 grand, 100 quid risk per trade. And I did it because I think you should show how this stuff works in the real world rather than having a theoretical thing of how it works. So this is the rolling 30-day performance. as of the close of last night, 1st of December, 2nd November to 1st of December. So realised profits £622 on the £4,000 account, which I think is pretty good. That's a 15% return over the last 30 days. Of course, past performance is no guarantee of future performance. I've done a couple of poor trades this week, and you can see it getting pulled back here. Bit of a pullback, but still up this 600 quid plus figure. There's a trade for those of you on the live stream, no, the webinar last night. That sterling yen trade, I closed it out today for 150 profit in the end. So there's actually another 150 to go on top of that. That's realised profit today. It's not picked up because that was up until the close of play. So that's the trading course. So there's a medium term approach over days and weeks, a bit more relaxed based off daily charts. There's the more aggressive short term trading approach based off hourly charts. Trades typically run for 2 or 3 days on that approach, and in it all there's live webinars. So if you go to my website, jonesandmarkets.com, you can find out more about that. If you have any questions, feel free about the course, anything you want to ask me, feel free to drop me an email, dj@davidjonestrading.com, and I'll respond to you, or any questions about trading. I don't have all the answers, but I can definitely give you an opinion. I would say as well, I put the price for the course up at the beginning of November. I'm putting the price up again at the beginning of January. So if you're thinking about doing it, I'd say you should buy it in December rather than January. It'll probably go up by about 300 quid is what I'm going to put it up by in January, just so you're forewarned. So, but take a look at it there. Right, let's get into these markets. I think when we're seeing volatility like this, it's probably more important than ever to take a step back and look at the bigger picture. So I think for me, I know that most of the time I look at daily charts anyway. It's very easy, I think, on a day like today to get sucked into the excitement of the 5-minute chart, but we're going to stick with our normal medium-term view. So what's happened? Well, all right, quite a bit of noise this week. Any real change? This is the S&P 500. For me, no. We looked at this last week. We looked at it. I did that live stream on Wednesday. I've started doing the midweek live streams just to try it out in December, see how popular they are. There's since the beginning of this year, the trend for the S&P is down. Yesterday, the S&P did push to its best levels since mid-September. So we had a 6-week high? No, it's not. It's a 2.5 month high. 2.5 month high in the S&P yesterday. Has it changed the trend? For me, no. So for me, I still think that this is the danger zone, to quote Kenny Loggins, for the S&P. 4,100 to 4,160, 4,155, that sort of area. Okay, and we've seen rallies, of course, all this year in the S&P, and ultimately they've come to nothing. So this is the test for markets. At the end of the year, do we finally break out this downtrend? Do we go up through 4,155 and we start talking about recovery into 2023? Or actually, are we going to see it run out of steam again? For me, I would be absolutely leaning towards a short here, assuming the trend is still down. I wouldn't go short today. I've a bit of patience, see where it ends the day. But for me, we're back up at these levels again. So let's see. So, lots of noise, but actually no real change. Now, we are where we were a couple of weeks ago, near enough. We're this little zone up here. So, trend's still down. So for me, interesting, but I would not be surprised if it came under some pressure. If we looked at, the short-term chart, from a short-term point of view, and you can often see this, you'd still be a buyer of dips. If we look on the hourlies from October to now, absolutely that trend is still up. So there is still the argument from a short term to be a buyer of the dip in the S&P. So I'm not saying it can't push back up to the highs from yesterday. Maybe it will. So short term, still that momentum in the market off those mid-October lows. But just longer term, I'd just be wary of that trend reasserting itself. Let's see, an interesting couple of weeks ahead anyway in the run up to Christmas for the S&P. If you take a look at the Nasdaq, it's a similar story, isn't it? Nasdaq, there's the downtrend. I've actually picked that up from the highs end of December. So we're more than 11 months into that for the Nasdaq. Same old for the Nasdaq. 12.2 or thereabouts. Is that going to be the ceiling for the Nasdaq this time round? Let's see. The Nasdaq, does not look as clear, trendy as the S&P. I don't think, does it? The Nasdaq looks a bit choppier. So again, for me, it could almost be a short up here because it hasn't really moved convincingly through that old high. What's that old high? 12,090. So for me, perhaps the aggressive trade, go short now, 11, whatever it is, 880, with a stop at 12,150 or something like that. Let's see what happens. But, trends still very much down in these markets, S&P and Nasdaq. Let's take a look at the DAX. The DAX is different. I said this last week. The DAX, again, not much has happened over the last week or so. But, we did have big downtrend in the DAX since beginning of the year again. But the DAX over the last month or so, it's broken out the downtrend, broken some big levels on the way up. So for me, this looks the most positive. If we're looking at S&P, DAX, Nasdaq, the DAX looks the most positive. So I'll be a buyer of a dip on the DAX. If we look on the hourly charts, I'm not sure what that looks like on the hourlies. It's been a bit, you can see it's been a bit, lots of noise, not much progress in the last couple of weeks. But for me, I would say that recovery trend is still very much up on the DAX for me. So I'd rather see a bigger dip though, a much bigger dip, sub 14,000 and get in on that. It's pretty overbought for those of you who are fans of the squiggles, the RSIs. This is the most overbought the market's been since for a year actually. That's interesting, I suppose. There you go. Got to go back to November last year to see the DAX this much overbought, and here we are on the RSI. That's a 14-day RSI. I don't like a 14-day RSI. I quite like a 10-day RSI. So let's do that. What's a 10-day look like? Not vastly different. No, there we go. Yeah. So again, still up at these overbought levels. So that's that. Let's take a look at the markets that I never look at, the FTSE and the Japanese market. I'm not expecting too much excitement here. But now the FTSE, I would say for me, that looks like a short. We know the FTSE has traded very differently to the likes of the S&P this year, because different makeup, more defensive. A weaker pound helps the sort of stocks that are in the FTSE because they report in a currency other than sterling, a lot of them. And we're here. We are up at the top. Actually, this is quite, it's a big old top up here. We're back up, this whole level from 7.7 down to about 7.6 has not, the FTSE's not been able to trouble this in about 3 years. So we're back up to what had been historical highs for the FTSE. So for me, I would absolutely be getting the shorting head on, I think, for the FTSE up here to see if it starts to run out of steam. But like I say, I never trade the FTSE. It had a great run off those lows, since October, 6.7 to 7.5. That's more than a 10% move by the FTSE. So it's a good run. But we have seen these levels be something of a graveyard, haven't we, historically, for the FTSE? Let's see what happens. Maybe we're going to get some sort of epic breakout for this market. I wouldn't bet on it at the moment. I'd bet against it, but we'll see. We'll see what happens. And the Japanese market, again, pretty sideways. This sell-off is quite interesting, I think. For me, it's a bit boring, again, from a daily point of view. I think it could be an interesting market next week. If we have a look at the hourlies, let's have a look at the size of this sell-off. What's it look like? So if we pick up on the trend from thingy, wherever it is, down here. I can't actually see, I've got too much stuff going on. I could be tempted to be a buyer of that, really. It's not. We do have this trend that's been up since the beginning of October. What's of interest to me are these old lows from early in November, around about wherever it is, down here on the Nikkei, about 27.4, because it was something of a floor. So I suppose if you thought the sell-off in the Nikkei had been overdone, the aggressive trade is to be a buyer at 27,670, wherever it is now, and for me, a stop the other side of 27.3. So that would be, 400 points risk, but if it runs all the way back up to the highs from just yesterday, actually, or the day before yesterday. It's like 800 points upside. It's just an interesting trade, I think. Let's see what happens. Maybe for me, I'd maybe leave it till Monday and see what happens there. So that's that. That's the markets to watch. So stocks, US stocks, lots of noise, not much change for me. I still think they'll be a bit vulnerable up here to this old trend coming back in. Let's see what happens. Let's take a look at the dollar index. Dollar index has had, keep seeing the headlines, the worst month since since 2010. So we've seen a big decline for the US dollar after these great trends over the last 18 months. The market closed end of October at 111.5 and then finished November at 105.8. So lost not quite 6%, 5 and a bit percent in October. And it does beg the question, is this finally the end of that great trend in the US dollar index? Of course, you could argue, if you're going to be a purist about this, well, the trend line's still intact. The market had massively accelerated away from that trend line since February of this year. So that accelerated trend, if we were going to pick up on that, has ended. It looks something like that. There we go, something like that. So that's ended. What's going to happen down here at this trend line? Who knows? But for me, it's pretty weak, isn't it? Again, I think an aggressive trade here. I wouldn't do it today, but it might be an interesting trade for Monday. On the way up in August, the dollar index held around 104.60 and then ran 1,100 points higher, something like that, wasn't it? So ran a lot higher. Here we are today, spiked below that, traded to 104.37 today. An aggressive trade, if we were going to treat that as a false break, the move today. For me, if I saw a positive day on Monday, one argument is to be a buyer with a stop underneath today's low, whatever that ends up being. So that might be an interesting one. We'll take a look at that on Wednesday's midweek market thing and see how that panned out. But I do think, I've said in the past, it's been a great market for me over the last couple of years, the dollar index. I think that momentum has well and truly gone now. I don't think the dollar index is going to be troubling 114 anytime soon. So that doesn't necessarily mean I think it's going all the way back to 90, but perhaps we just have some chop now in the dollar after this great trend that's been in place since May of last year. But I'd quite fancy even still quite a sneaky buy on Monday if we saw a positive day on Monday. Let's look at some of these other markets, these other FX markets. Euro dollar. I said on last week and again on Wednesday, for me, I'm be a buyer of dips on the euro against the dollar. We've not had a decent dip. It did again, well today actually, it's pushed up today. It's reversed it, but it's pushed up to its best levels since June of this year. So we're at a 5-month high. Again, we can, for me, the downtrend is broken. It's broken some big levels. This is a reversal. This is, for me anyway, this is the euro finally turning its fortunes round. So I wonder if 2023 ends up being a much more different year for the euro than 2022 has been. So for me, I'd absolutely be a buyer on dip for a short-term trade. We've got good support off the third week of November lows at 102.20. I'd rather see for a bigger trade, a deeper sell-off. But for me, it would be interesting if we saw this market under some pressure next week. But let's see if it happens. We do have a bit of, bearish divergence on the RSI, for those of you who are fans of that. So the market makes a high, pushes a bit higher still. RSI makes lower highs. Can be a suggestion. The market's going to run out of steam. But for me, a buyer of the dip on euro US dollar. Now, pound against the dollar, I suppose, this is interesting, I think. If I had to do a trade, pound against the dollar, I would go short. That is what I would do. So we've had a downtrend all this year. It broke out the downtrend, but this level, these, early August highs, late July highs, 123 or thereabouts, have been something of a big problem. So for me, if I wanted to go short pound against the dollar, this is the ideal place. Go short now wherever it's trading, 122.10. Stop above the high, whatever the high is. So yesterday's high was 123.10. Let's say 123.50. Give it a bit of wiggle room. 123.50 stop. And it's just interesting to see if this thing here has ended up being a false break and the pound's going to sell off again. I think if we go through 123 properly, it starts to look again like the euro. We're seeing a reversal, so we're seeing finally these currencies turn it around against the US dollar. Let's see what happens. But I think for me, that is a really interesting market to watch next week. Pound against the dollar, and 123 or thereabouts is the level to watch. Let's see what happens. For me, I'd want to be short. Aussie dollar, I thought we'd include this one today because again, it was an interesting one that someone brought up on Wednesday. So I thought we'd have a look at it. Again, for me, and I was saying on Wednesday, I'd be looking to go short. I think again now, I would still be looking to go short. It's had a little look through this old resistance and I would still go short. Let's say a stop at 69 or something like that. And I think again, if this market breaks higher next week, it looks like the Aussie is turning things around against the US dollar. So I think it's always difficult to call. I think when markets are like this, when we have a potential change in trend, makes it a difficult call. And patience, I'm always a fan of patience, waiting for it to sort itself out. But we do have, not surprising because they're all against the US dollar, a few of these markets on the cusp of maybe changing the major trends that have been in all this year. So, or for most of this year at least. So, some interesting stuff to watch. And the final FX, before we look at something else, sterling yen. This is the trade I did yesterday. It was a really good trade, even if I do say so myself. But sterling yen, to take the dollar out of it altogether, the trade I did yesterday, this is an hourly chart. So this was based off one of these strategies in my short-term trading course. But it was a really logical trade to do. The market, sterling yen, had been trending lower, hit a low, new low for the move for the week yesterday, about 7 o'clock yesterday, rallied back up and ran out of steam. And we had this old resistance up here. So I ended up going short at about 4 o'clock yesterday afternoon, 166.70. Nice stop in there. Market sells off again, and I've come out of it now. But it's still weak for me. So that could be, if you want to take the dollar out of the equation, I think sterling yen could be an interesting one to watch next week, just because of this trend that's been going on for a week or so. Anyway, let's take a look at some of the other stuff. Gold. So gold, 2 trades I did this week was stupid. And because I did them at the same time, I'd had quite a good run in terms of profitability. So I perhaps got a little bit carried away this week. So I ended up the beginning of the week, and they worked for a bit, and then they didn't. And it was I shouldn't have done them both. But I was short gold and long the dollar index. Now, anybody with half a brain knows that's basically the same trade, isn't it? Because I'm speculating the dollar's going to go up, and I'm speculating gold's going to go down. And clearly they do move normally inverse to each other. So the trade did work for a bit, but I ended up getting stopped out in it on that move on Wednesday night, Thursday morning. Anyway, this is gold. This is where we are in gold. I would say this is another one, of course, being driven by the weaker US dollar. This is another one that looks like it's reversed. It is, in the process of reversing the trend that's been in place since March of this year. That surge up when Russia invaded Ukraine. We saw the market run up to 2,000 and something, not quite taking out the highs, the all-time highs from August 2020 in gold. So for me, again, I'd like to buy a dip. I'd like to see a decent dip in gold and see if it can build some sort of recovery from here. But for me, what we've got over the last 3 weeks does suggest that finally this trend is coming to an end. Got good support ahead of 1,600, broken out the downtrend, broken the highs from October. To me, that all looks bullish. It's just whether, do I want to be a buyer now or do I want to wait for a sell-off? Personally, I'd rather wait for a sell-off down to the low 1700s. Let's see what happens. Let's see if we get it. But for me, another interesting market that perhaps 2023 could be a different story for the price of gold compared to what we saw in 2022. Silver, same old story for silver. I think we've got a bit of a again, this recovery going on for silver. I mean, some strong moves in silver over the last few days, from 21 up to 22 and a half now. And again, for me, I'd rather buy the dip. The problem is, if I'm waiting for the dip and the dip doesn't come, I miss out on it. But for me, I'd much rather buy a bit of a crazy reaction in silver, perhaps down to 21. But another one where you'd have to say, or I'd have to say, it looks like we're seeing quite the turnaround in silver. Oil. I think oil is, for me, I did a really good trade on oil this week. Still an interesting market for me to watch. I said, I think in the live stream on Wednesday, I'd want to be a buyer of the dip. I don't know if we've had a dip. We had a bit of a dip today. I mean, it's been pretty strong this week. Monday, that's Monday. It traded down to, 73.50 a barrel, nearly, on Monday. And that was a new low for the year, very briefly, a new low for 2022. And it's been as high as 83. It's a big old move. A $10 move in oil this week is a 15% move in the price of oil. So for me, I'd still think we're perhaps building an important base down here in the mid 70s for oil. Again, going into next week, if there was a dip, I'd be a buyer. I don't think that oil is going to be troubling $120 a barrel anytime soon. But I'd like to buy a dip in oil. The flip side, I think if we go below that low from Monday down at 73.60, I think the risk is for a much deeper sell-off. Perhaps down to the mid 60s. But for me, that sort of 73, 75 area has proved to be really good support, and it looks, I think it does look like there's an appetite to be a buyer whenever we see it much below 80. So I think it's an interesting one for next week, the price of oil. Natural gas, I should probably have traded it this week, natural gas, but I didn't. But anyway, for natural gas, the big trend is still up, going back to 2020. That's still up. It had this crazy move, as we know natural gas can, from $5 the 24th of October to above $7.50 by the 23rd of November. And it's been giving it up since then. It's been a lovely trend on the old hourlies. Look at that, just gradually nudging its way a little bit lower every day. So that would have been a nice trend actually to trade. But anyway, it's still at the end of the week, it still looks pretty weak. Let me just tidy this up and get rid of some of these things out of the way. Here we go. So still looks pretty weak, but I would say we do have our little trend chugging along from whenever that is, October. So I would we had lots of support, sort of $5.60 to $6 area. So I think it might be interesting next week if we see, it's definitely still weak today, but do we see perhaps natural gas start to turn around a bit next week? So it could be interesting if it slips sub $6, I think, next week. There's that trend on the daily charts, you can see it. So I think if we push back into this sort of zone, it could be a nice little trade next week on natural gas. Let's see. I mean, clearly it can be a bit of a nuts market, can't it, at the best of times. But let's see what happens with natural gas next week. But still weak today. Bitcoin. Let's look at the crazy world of Bitcoin, shall we? Let's see if anything at all has happened there. Nope. Just dull. Yeah, nothing to say, really. 15-ish has been a base now, all the way through November. So much, I think I've said this before, so much hype and noise has been taken out of that market. We'll keep coming back to it and see if things change. And I'm sure something will happen, whether it happens this year or next year, something will happen that will cause another significant move in crypto. Whether that's up or down remains to be seen. But I bet we get a move where it either goes up 50% or goes down 50% again next year. So let's see what happens. But pretty quiet at the moment. Okay, let's jump into the questions. I think that's it. So what I'd say, so markets to watch next week. I do think the currencies are interesting. Pound against the dollar is interesting because we're bumping against this level, 123. So that is an interesting market. Stock markets are interesting just because they're still in the downtrends, and I wonder, are we going to see the weakness come back next week? I know I said it this time last week as well when we were here, and we did have the weakness for a couple of days last week. Then we had that statement from the head of the Fed, and markets had a rocket up their backsides, but we're drifting off again. So I do wonder what happens with that next week. So I think that's interesting. And the oil price, I think, is interesting to watch next week. So let's see. Let's see what happens. So quick word from me again. To find out more about my trading course, trading, go to jonesthemarkets.com. Any questions, drop me an email, dj@davidjonestrading.com. And yeah, so we'll jump into any stuff you want looking at. Natural gas by the dip. We had a look at natural gas, didn't we? Yeah, for me, that's another interesting market to watch next week, to see what happens around the sixes, the low sixes on natural gas. So worth keeping an eye on. Platinum. Yeah, we looked at that. I did add it. Did we look at it this week or last week? Anyway, whenever we looked at it, that trend is down in platinum, right? And I remember saying, let's wait for it to stop going up. And today it has stopped going up quite dramatically. So for me, I wouldn't do anything today, but absolutely, if I was trading with the trend, I'd be looking to sell short, with a stop the very closest above that trend line at 1080. But this trend in platinum has been going for 18 months now. So again, is this the top? Is this where the market rolls over? Let's see. I think if it takes out 1080, it starts to look like yet another trend reversal. But for me, at the moment, still weak. Trend still down in platinum. Let's see where it is. Let's see where it is next week. Is there any correlation between the DAX and the euro against the dollar? I'm sure there is. I'm not sure how I describe it though, because clearly the DAX is the German stock market, as we know, the powerhouse of Europe. The euro is the currency, so you'd think that there would be some sort of correlation there, but I can't put it into words, so I don't really know. I just Googled it to see if there was an easy answer. I can't see any easy answers, but you guess, I think does a weaker euro make the DAX go up? I don't know. So if we see a strengthening euro, do we see a potentially weaker DAX maybe? This sort of stuff, I don't overthink it. I just trade whatever the market's doing. So I can't help you much with that one, unfortunately. CrowdStrike. So CrowdStrike are a software company, aren't they? CrowdStrike, one of the sponsors of one of the Formula One teams, aren't they? I think. CrowdStrike Holdings, NASDAQ. Oof. For me, it's quite gappy, isn't it? Did it have earnings this week or something? So there's a big gap, isn't it? So on Tuesday, it closed at 138 and it opened at 117. A big fall, isn't it? 15% drop. So for me, I'd be a seller of CrowdStrike because, the usual stuff. The trend is absolutely down for me. I might want to be a bit patient and see if it has a bit of a run up to like 140, 145 or something like that and sell it there. But that trend is down. Despite the odd run up, it just gets battered again, doesn't it? CrowdStrike. So for me, sell the strength. I had a great upward trade on New Zealand dollar, Canadian dollar, but now it's gone down. Do you think the upward trend has run out? Let's have a look. New Zealand dollar, Canadian dollar. New Zealand dollar, Canadian dollar. Let's have a look. Wow. A great upward trade, but it's gone down. Hang on, are we looking at the right market? Did you look at it the other way around? That's New Zealand dollar against Canadian dollar. I mean, that looks like an absolute runaway uptrend to me. So for me, I'd be a buyer of the dip. Maybe you looked at Canadian dollar, New Zealand, maybe you looked at it the other way around, in which case the chart would be the other way around. But for me, what would we say? Is that trend still down? It's right on the cusp. Look at that. I've drawn. No, it's not. If I could actually draw a trend line, it might look different. Hold on a second. So it looks like it's breaking, doesn't it? So another one that's reversing its major trend. I mean, that is a heck of a move, isn't it? By the New Zealand dollar against the Canadian dollar. So for me, I'd rather buy a dip. And the problem is, if I'm waiting for the dip and the thing just rips higher, you never get in. But for me, I think if and when it sells off, it will be interesting. It was up, but it had a long candle down today. I don't think so. Not for me, it hasn't. I think it depends what you're looking at. If you're looking at that candle, okay, it's had 1 hour where it's gone down, I would say it's still above yesterday's close. For me, if I was in the trade, I would, and again, you've got to do what you think is the right thing to do. But for me, that is a market that is still strong. So if I was in a trade like that, it's a perfect trade for me. If you've been in a trade like that, just keep trailing the stop up to try and milk as much profit as possible. So for me, if I was worried, if I had an open profit and I was worried about it, the closest I'd have my stop would probably be the other side of 85.20, something like that. But it's it's had a great run. Interesting one to come back to. I'm not in the trade, so I'd rather be a buyer of the dip on New Zealand dollar, Canadian dollar, Aussie dollar, New Zealand dollar. Oh, we're doing all the Kiwi stuff today, aren't we? Aussie dollar, New Zealand dollar. Oh, that is still weak, isn't it? So that is, why has the New Zealand dollar had such a? What have they done in New Zealand to have such a great run of strength? New Zealand, I'm gonna have to Google. I'm curious. Is there a reason? Let's see. Because of inflation, a hawkish central bank. Oh, I don't know. It's just a lot of words. So New Zealand dollar against the Aussie dollar. So for me, great trend, absolute great trend, that one. So another one. If I was short, I'll short the Australian dollar versus the New Zealand dollar. I'd absolutely stay short. It'd be interesting to see what happens down here. The mid-March lows, not a million miles away, down at 106. But again, I would be tempted, if we did have a rally in that, to be a seller of a rally again, sell the Aussie again. Interesting market though. I'm going to add that. I'm going to add that into my little list of markets to look at on Wednesday of next week. Let's see what's going on with that next week. Some big trends in these markets, isn't there? Copper. Let's have a look at copper. It's much of a muchness, isn't it? Really, it's not. I mean, for me, I think that's bullish. I think it's like copper is trying to stage a recovery. It's just not doing a very good job of it. But I think these lows that we saw in the summer, in July, down at $3.13, important lows. I'd rather buy a dip. I wouldn't buy it here personally, but I do think it's trying to build a base and move higher. It was it's only a couple of weeks ago we saw the copper price at its best levels since June. So it is bullish. It's just not crazy runaway bullish, is it? Let's have a look at wheat. Wheat. Oh, I say I'm in this trade actually. I'm actually in this trade, wheat. And I don't pay that much attention to it because it's a medium-term trade. But it's not looking too clever at the moment. It's sort of bounce or bust territory for me, wheat. I bought it in August. I got a stop under here and a bit of a run up. It's run back down. We looked at it on Wednesday when it was doing that. There we go, on Wednesday. And I thought, well, that's it. We're going to build a base and have another run at 960. But it's not. It's drifted lower. So if you're into the agricultural commodities, it could be an interesting one next week, because I think if wheat breaks below 740, the risk is for a much deeper sell-off, because I was sort of banking on this uptrend reasserting itself back here in August. I didn't think it'd be up to like here anytime soon, but I thought we could get a half decent run, and it's not materialized. We've had sort of half of a half decent run. So it's interesting wheat next week. 740, bounce or bust time. Let's see what happens. We'll come back to it on Wednesday of next week. What's your opinion on ABC? Okay. If you're going to put stocks in, if you could put the name in, because there's quite a lot of crossover with some of these stocks. I'm guessing you mean AmerisourceBergen Corporation. Whoever they are, what do they do? Distribution, medical things. Looks good, doesn't it? ABC. If we picked up on that, it's a breakout, isn't it? So for me, I think I always have a problem trading breakouts, because you never know if it's a real breakout or a false breakout. There's no way of knowing. What I like to do is buy the dip if it dips. But this has been really strong, ABC. So, and if you're into stocks, it's an interesting stock to watch next week. I would absolutely, if we got a half decent dip, I'd be a buyer of a dip. Again, the risk is, with a runaway market like this, that it doesn't dip. But let's see. That looks pretty strong to me. ABC and SanM. What is SanM? Sanmina Corporation. Wow, that's another nuts one, isn't it? Electronic technology. What have they done this year? So since July, they were $40 in July, and they're nearly 70 today. I mean, it's pretty. Again, I absolutely could not argue with the trend on that one. The only question is, and it's always the most important question for me, where's my stop going to go? If I'm a buyer now, where's my stop going to go? So for me, if I was a buyer at $68, the closest I'd want my stop is probably the other side of 62. This gap, let's say 60 for a stop. So, I mean, it's great performance. Again, if I wanted to be a bit more conservative and cautious, I'd wait for a dip. The risk is if the thing takes off again, you miss out on it. I don't trade stocks anyway, so I would never have seen it. But for me, if I was a buyer now, I'd have the stop under 62, 60, something like that. Yeah, so it looks good. Both good stocks, those two. Aussie against the Swiss franc. Aussie dollar, Swiss franc. What do you think? I don't know. I don't know, to be honest. What would we say? Would you say the trend is still down? I suppose you could do. I'd probably rather go short than long. So for me, it's been a bit of a sideways couple of months for the Aussie dollar against the Swiss franc. If I absolutely had to do a trade, then the trade I would do, sell short with a stop loss, perhaps the other side of 64.50. Okay, so perhaps, this trend has slackened a bit. Perhaps we'll see a bit more Aussie weakness and it has another look at 62. So for me, that would be the trade. And this was an important old level that's gone. Let me pick up on the right line. This old whatever it is, this level here. Oh, just click, will you? There you go. That's 64 level. It was a big level and it sort of drifted below it. So for me, I would go short and I'd reevaluate it if it broke above 64.50, 65. So yeah, interesting one. GDXJ. What is GDXJ? Is it some sort of gold thing or is it something else? GDXJ. VanEck Junior Gold Miners ETF. Let's have a look. It's interesting that we used to do these on the old channel. Look at some of these gold mining ETFs, and they always underperform the gold price. Not surprisingly, it's done well because the price of gold has done well over the last month or so. If you were going to be a pedant, you could say, well, look, the trend is still down since August 2020. The trend is still down, and and it is. But I'd probably be more interested in what's gone on here since April of this year. And I would argue it's turning it round. We've had, again, if we drew a downtrend in place, the downtrend's over, I would say. It looks maybe something like that. It's not the most brilliant downtrend in the world. So it looks something like that. We've broken above 32. So for me, I would be a buyer. Again, I'd rather buy a dip because everything's a bit extreme. If I was a buyer today at 36.70, the closest I'd have my stop would be the other side of 32. But it does, the better trade for me was if we did get a bit of a push down to 30. But it does look like it's turned the corner, the old VanEck Junior Gold Miners ETF, doesn't it? In the short to medium term, at least. Let's see what happens. Topps Tiles. Okay, Topps Tiles, the UK tile retailer. I guess it's those. Oh. I mean, they have not had, God, I remember that, God, it's incredible, isn't it? So they were £3 a share, it was going back a bit, 2007, and they're 47p now. I mean, I think I often say, when I look at some of these bombed out stocks, I don't like them. But if you absolutely had to have a punt, I mean, clearly they've had a bit of a move today. I mean, a 2p move today. Let's crack out the Bollinger. If you absolutely had to punt, if I was a buyer now, I'd put a stop at 35 for me. But I think some of these, it's a polite way of saying it, long-term underperformers, they're long-term underperformers for a reason. And Tops has been sliding for 7 years. But maybe it's going to have a bit of a revival. But that would be the thing for me. But, I think penny stocks are penny stocks for a reason. And the reason is they're not very good. So not one for me. But, we did see a sharp move off 27p in the pandemic lows in March 2020. Perhaps we'll see some of these crazy buyers come back in again down here, taking the view it's a bit too cheap. Let's see. But, it's not really my specialist subject, the old small stocks. Alibaba. Now, Alibaba, I remember from the old days, used to have a massive downtrend, didn't it? Which one is it? Is it the Hong Kong listed one? It's probably as good as anything. Is it still listed? I can never remember. Is it still listed in the US? Or is it like a depository thing? Anyway, it doesn't matter. So we have had over the years is it like the Chinese Amazon, isn't it? I think is how it often gets referred to, I think. This massive downtrend in Alibaba, which I can't draw very well, but looks to me something like that. So I would probably go short. I would take the view, okay, we've had a bit of a run. It has a little look through the downtrend, but it's only 5 weeks ago it hit its lowest point in that downtrend. So for me, I would still be tempted to go short. I wouldn't go short yet, but if we had a couple of days next week where it stops going up, I'd go short and put a stop loss above 104. So for me, I don't believe the trend line break is what I'm saying. Yeah, I think there have been odd occasions on the way down for Alibaba, like here in June of this year, where it has the little look through the downtrend and then lo and behold, falls off a cliff again. So for me, I'd be tempted to treat this latest move as a bit of a false break. So I'd be a seller of strength. Let's see what happens. See if we can get to $100. Let's see. But for me, I'd be a seller. AUY. What's AUY? Yamana Gold. Okay. It looks a bit boring to me, that one. I mean, it's a big sideways trend. It's had a great run over the last couple of months from $4 to 5 and a bit, 5.60. But for me, I mean, if I was in it, I'd be a bit worried that it can't really ever hold much above $6. So for me, I'd be tempted to be cautious. But again, it just looks a bit nothing to me. KHC, the Kraft Heinz company. What are they doing? Let's have a look at those. Oh, it's the same in it. It's a bit dull, isn't it? A little bit sideways. For me, okay, if I had to trade it now, I would sell short. I'd sell short with a stop above 40. Let's say 41 stop, because we've seen it. It's a bit sideways overall. Nothing too exciting. This was, if we go back to whenever that was, May of this year, this 39 to 40 has been a real barrier. And it's had a little ambitious poke up there on Thursday, and we're not getting the follow through. So for me, I'd be tempted to sell short, but I think medium term, it looks just a bit of a boring sideways one. Will there be a NASDAQ Christmas rally this year? Who knows? I would be leaning towards no at the moment, but historically, if you Google Santa rally, historically, the stats do bear out stronger stock markets over the next 3 weeks. Okay, so let's see. I mean, I'd never risk any money on a Santa rally, up or down, yes or no, whatever. Historically, it does happen. I personally, I don't think it will, but let's see what happens. Maybe the markets do blast out of these downtrends and prove us all wrong. Dollar against the rand, US dollar, South African rand. Okay, let's have a look at that. I've not looked at this for years. I remember this having really good trends going back a bit. Let's have a look. When did back here it was. It wasn't, 2020 through to 2021. What would you do? What would you do there? I think that's a difficult one. I would probably, it's quite scrappy, isn't it? I'd probably lean to be towards being a buyer of the the dollar against the South African rand, I would take the view, okay, the thing is, so this trend here since April, so that's what, 7 months trend, it's fallen out of the trend, it's all got a bit scrappy the last couple of weeks. I would take the view, maybe the dollar is going to have one last push against the rand. So I'd be a buyer, looking to see if it can get up to $18.50. The closest I'd have my stop would be the other side of these lows, whatever they are, 16.8. It's not. I'd rather see a sell-off and buy a sell-off. But yeah, for me, I wouldn't be betting just yet that the dollar against the rand trade trend is over. Let's see. Let's see what happens. But quite a difficult one, that. But so there have definitely been some interesting moves in that one over the years. Can we have a look at sterling Canadian dollar? Sterling against the Canadian dollar. Yeah. I think it's always good to look at things that take out the US dollar at the moment, because the US dollar is all a bit one way. I mean, that's another quite a vicious turnaround, isn't it, by the pound? What would you do there? I mean, for me, I'd never look at it. I would, and let's flip it over to an hourly chart. I would probably be a buyer, or I would be a buyer. Again, I'd rather buy a dip. You know, there's a lot of stuff, because of what's gone on this week, there's a lot of stuff that is a bit extreme at the moment, but I would buy a dip. Interesting one though. I mean, only yesterday, sterling, you know, hit its best levels against the Canadian dollar since, oh God, hang on, where do we have to go back to? Got to go back to sort of here, April 2022. So for me, I'd rather buy a dip because it suits my risk control better. If it dipped down towards sort of 163, it looks, so 150 points lower than where we are now. It looks like an interesting trade for me, that one. I don't know if I'd want to buy it here. Let's see. Let's see what happens. Let's have a quick look. What are stock markets doing? Now they're clawing back some of these losses, aren't they, from earlier on? Oil, oh, it's all a bit sideways. So yeah, so we're going to start wrapping things up there. So next week, what to watch? Well, I think, you know, a bit left field. That natural gas chart is an interesting one because we're pulling back to the trend that's been in place for a bit now, a couple of weeks. The US dollar index is an interesting one because we had a little blip below this big support today. Do we see something of a recovery next week? Stock markets, because I still think trends in these stock markets are down. And that's it, I think. And of course, pound against the dollar, actually, because it's right on the verge of that big level, 123. So there's a bit of a mix of stuff there. I think there are times when markets look a lot more clear-cut than other times. I don't think things are clear-cut at the moment. You know, this Fed thing on Wednesday has caused some distortion in the short term. Maybe things need to settle down a bit. There's, you know, for me, there are days when there are absolutely lots of trades to do, and there are days when there aren't that many trades to do, or weeks when there aren't that many trades to do. And I feel I'm leaning a bit to not that much to do at the moment over the last couple of days. Let's see what next week brings, and things calm down after the payrolls and Powell's speech and all that. So we'll wrap things up there. Thanks for coming along. Any questions, drop me an email, dj@davidjonestrading.com. You can follow me on Twitter. Follow me on Twitter. I'm at Jones the Markets on Twitter. Go to the website, jonesthemarkets.com, to find out about the trading course. We'll do the live stream on Wednesday. I think what I might do with these midweek live streams, I don't know what anybody thinks about it, perhaps make that one in the evenings. So perhaps do like a 7 o'clock in the evening live stream on a Tuesday rather than lunchtime on a Wednesday. I'll do the Wednesday ones for the next couple of weeks and then make a decision on it in January. Maybe that's the way forward. We'll see. We'll see what happens. But thanks for coming along. Enjoy the weekend. Go to the website, see about the trading course and stuff like that. If you're not subscribed on YouTube, if you could click on subscribe, it helps my, I don't know, algorithm numbers or something like that. And have a good weekend and see you next week.